There have been a number of changes in the tax law for the 2013 tax season. This session, I'm going to go over how the federal and the state differ in the tax law changes. The following are 7 different changes to the franchise tax board laws. Medical and dental deduction. This year, the federal raised the amount that you have to achieve before you get a deduction up to 10%. The state kept it at the old rate, last year's rate, 7.5%. So that's the way that it differs. Voluntary contributions. There's a number. California has always had a number of voluntary contributions organizations that you can actually voluntarily give your tax refund to, or all or part of it. This year they added 3 funds to this list. That's the Protect Our Coast Oceans Fund, the Keep Arts in Schools Fund, and the American Red Cross. The next change has to do with minimum wage. Minimum wage was actually increased, and it'll be effective on July 1st, 2014. The minimum wage was actually increased to $9 an hour. It's part of a bill, a 3-year bill that will actually raise the minimum wage each of the next 3 years, this year being the first year. And in 2017, it'll start being raised annually based on inflation, so it'll become more of a permanent thing. Net operating loss carryback. Net operating loss incurred in taxable years beginning on or after July 1st, 2013 shall be carried back to each of the preceding 2 taxable years. This is actually part of a 3-year increase that will allow for 100% of the NOL to be carried back by 2015. So it's going to start. This year, the carryback is not to exceed 50%. Mandatory electronic payments. California now requires taxpayers to remit all of their payments electronically once either an estimate or an extension payment exceeding $20,000 is made, or an original tax return with a total tax liability over $80,000 is filled. Once this threshold is met, all subsequent payments, regardless of amount, tax type, or tax year, will be remitted electronically. The first payment that triggers the e-pay requirement does not need to be transmitted electronically. Basically, this is not going to affect a lot of people. So, unless you have to pay taxes of about $80,000, you're not going to be affected by this. Mortgage forgiveness debt relief. The federal government now allows for discharge of indebtedness from the disposition of your principal residence occurring on or after January 1st, 2013. The state conformed to the federal law. So their law didn't change. So you don't get forgiven by California. Backup withholding. The laws regarding backup withholding changed this year. There are certain limited exceptions, but for the most part, payers that are required to withhold and remit backup withholding to the IRS are also now required to remit to the Franchise Tax Board on income source to California. If the payee has backup withholding, the payee must contact the Franchise Tax Board to provide a valid taxpayer identification number before filing the tax return. Failure to provide a valid taxpayer identification number may result in a denial of the backup withholding credit. That's about it for the changes in the Franchise Tax Board. I'll see you next time.